How about auditing the PP&E cycle for segregation of duties and internal controls? We want to, in order to assess segregation of duties, what would the auditor do? We're going to evaluate the current process for requesting and purchasing fixed assets. That's pretty important because we don't want just any old person in the company to just be able to go out and buy a vehicle, a truck, something like that. We want to review authorization levels for asset purchases. Maybe everyone can request $100 worth of expenses for the year, but then at a certain level, a certain employee can buy a truck, and then at a certain level, or only certain department is where someone can actually buy something significant. Just making sure that all of the policies and procedures make sense. We want to examine the process for recording depreciation and disposals. That could be pretty big if someone goes in and fully depreciates an asset and then just drives the truck home and says, oh, yeah, it was disposed of. Well, that's a problem because that asset was not fully depreciated. It had a few more years of life on it, and that was a property of the company, but it was stolen. We could assess the process for physical inventory counts. We could analyze the process of preventing unauthorized asset access. Assets should be under lock and key. Assets should always be most protected in an entity. And lastly, investigating the system of internal control for safeguarding those physical assets. Here are some examples of properly designed internal controls for PP&E. We could have periodic physical inspections of PP&E by the internal audit personnel, which provides assurance over the existence assertion. Important there. Personnel authorized to dispose of equipment, which is the custody function, are different than those authorized to approve PP&E removal. Work orders, which is authorization. This control would prevent the improper disposition of PP&E. Now, whether it's an accident or done on purpose because you're trying to drive home one of the company trucks or steal an expensive machine to then sell yourself, you want to make sure that anyone authorized to dispose of this, anyone who has the custody of it, anyone who physically drags it to the dump, is different from those who are authorized to approve the removal of these. So it's something to keep in mind, make sure you're familiar with. How would we verify existence of PP&E? Well, we can inspect the physical assets. I mean, just like inventory, a lot of these are going to be quite similar to inventory. We could inspect new additions listed in the PP&E account, checking for related purchase orders. Well, you say you bought a $10,000 truck. Where's the purchase order for it? Where'd you issue the purchase? Where'd you want to buy it from? And you can verify the asset's physical existence and that they've been placed in service. Another point there is that, yeah, you physically have the truck, but if it's still sitting in its packaging, and I don't know what packaging a truck would be in, but you know what I'm saying? If it has actually been placed in service, you should only start depreciation once it's actually placed in service and it's beginning its use. If it's just sitting around and not actually driving around, then you shouldn't start depreciating it. Inquiring of employees and management regarding the ownership of assets, making sure that management's not commingling cars or vehicles with the company. And lastly, reviewing the acquisition date of the assets, making sure that you see them. For our completeness, what are we going to do here? Well, we can examine the existence of all items on the PP&E list. We could compare the PP&E recorded in the general ledger to the physical count of PP&E. This would be a nice little bit of tracing here. We could examine the supporting documentation for the acquisition of the PP&E. We could confirm the existence of PP&E with third-party sources. Maybe these trucks are held by a third party, or these machines are operated by a third party. That's quite possible. We could analyze the depreciation and amortization of these assets. We could reconcile the asset account to the balance sheet. We could trace the serial numbers on the physical equipment, which is the source, to the client's subledger, which is the accounting record. That's another great, nice check there. And lastly, we could analyze the repairs and maintenance expense accounts to discover expenditures that were expensed but should have been capitalized. Nice check to make sure we have the appropriate amount. For occurrence, what are we going to do for occurrence? We are going to confirm the existence of PP&E with management. We're going to inspect the physical assets, review contracts related to the acquisition of PP&E, making sure that they've been appropriately recorded in the proper period. We want to read the prior year's financial statements to ensure that the assets have been reported accurately. We want to examine the depreciation and amortization schedules. And lastly, check the accuracy of the amounts reported in the valuation, allocation, and accuracy. What are we going to do here? We are going to compare depreciation calculations with accounting records to ensure that PP&E is listed at its appropriate carrying value. I'd say that's probably one of the most important. We can trace equipment recorded on the books and the property ledger, and PP&E listed on insurance and tax records, and searching for it during a tour of the manufacturing plant to verify it's still in use. That's another thing. You might have something that exists there, a piece of equipment, and it may not be in use, in which case it should have been disposed of. This would detect unrecorded retirements of equipment. You could have a piece of equipment there that is not in use, but it's just sitting there. Maybe it should have been disposed of. You could see an asset that they say is still operating, but it's not in the plant, it's not in the factory, it's not actually operating. All of these you could detect through these processes. Lastly, you could examine debits to the accumulated depreciation account. Okay, thinking back to our nice little journal entries, they never lied, which should correlate with disposals of PP&E and confirming that these assets have been disposed of. Really thinking big brain time, thinking at a higher level, how the journal entries tie in with the general ledger, tie into the balance sheet, tie into the physical assets. Next up, PP&E. How are we going to assess cutoff here? We're going to review fixed asset additions and disposals before and after year end to make sure that they are in the correct period. For presentation and classification, we want to make sure that everything's in the correct accounts, properly classified, everything's clearly understandable. We could analyze the repairs and maintenance expense accounts to discover expenditures that were expensed but should have been capitalized. Again, a very important concept there. We want to make sure we have that down. And we could also read the required disclosures that management must make for PP&E adequacy. Similar to our other cycles, we're going to talk about different departments, individuals involved in this particular cycle. And here we see the accounting department. Oh, the important accounting department, just wonderful. Probably very nice people there as well. They are going to be responsible for recording and tracking all of the transactions, documenting them. We want to also understand the corporate finance role. Here, these individuals are going to budget for, forecast, and analyze the financial impact of PP&E decisions. That's a pretty important point of the cycle overall. Procurement, sourcing, negotiating, and purchasing the actual assets. Human resources, these individuals are going to recruit, train, and manage personnel who are going to use the trucks, machines, equipment. Asset management, responsible for tracking, maintaining, and disposing of the actual assets. You see how these different departments need to be separated out so that those who buy the assets maybe don't get rid of them, and we separate those duties out between departments. Risk management, identifying and mitigating potential risks associated with the assets. And then lastly, IT, just doing all IT related things. I'll leave that as a nice amorphous blob of responsibility. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.